Hi, my name's Byron Udell. I'm the founder and CEO of AccuQuote.com. Today we're going to talk about ROP, and that stands for Return of Premium, and it's typically used in the term life insurance arena. And the question is, does ROP term make any sense? Should I consider it? Does it make sense relative to a standard level term policy? ROP term policies are generally sold in a 30-year level term chassis. So when we look at ROP, we have to sort of compare them to what we'd otherwise buy, which is a 30-year level term, and we have to decide if it makes sense. And I think the best way to understand ROP, and the simplest way to understand it, is a piggy bank analogy. For instance, if I were to say to you, you need to put $5 a day into a piggy bank for the next 30 years. So approximately $1,700 a year, or over 30 years, that's $51,000. At the end of 30 years, you open it up and you got your $51,000. Not such a bad idea. I don't think anybody would argue that it doesn't make sense to do that. In fact, we tell our children to put money in a piggy bank. Why do we tell them that? Do we tell them don't put money in a piggy bank because you don't earn any interest on it? No, we tell them put money in a piggy bank. Why? Because it's fun to open up the piggy bank sometime down the road and you have a whole bunch of money in there. Here we're talking about $5 a day, or let's say $1,700 a year, which is, again, $51,000 over the 30-year period. Now what happens with ROP is, in exchange for you setting up that piggy bank, which is your money at the end of 30 years if you don't die, we'll set up an account for $500,000, let's say. And again, these prices are going to vary based on your age. That may not be the price for your age, but whatever the price is for your age, you still get 100% of your money back at the end of 30 years. And so you set up this piggy bank, and at the end of 30 years, you get to cash it in, or you get to open up the piggy bank, crack it open, and have the fun. But meanwhile, we'll set up an account for $500,000. Something happens to you, you die, we'll take whatever was in the piggy bank. If you had kept the piggy bank going for, say, 2 years, we'll get $3,500. That's all that's in the piggy bank. You'll get $500,000 tax-free. Can you think of anything more simple that makes more sense than this? I certainly can't. I think it's one of the greatest products that's been invented by our industry. Makes a lot of sense. And when you think about it, you're sort of taking money from one pocket and you're putting it in another. You're saying, I'm taking it out of my present pocket and I'm putting it in my future pocket. But the money is yours. One way or the other, you're either going to cash open the piggy bank, or you're going to collect a death benefit, or your family's going to collect a death benefit for a whole lot more money. And by the way, those dollars are tax-free. Either way. So you crack the piggy bank open, all the money's yours tax-free. And if you get the death benefit, all the money is yours tax-free. That's income tax-free. So if you have any further questions about ROP, feel free to give us a call. But I think this sort of simplifies it so that you understand it. If you can afford an ROP, we like it. It makes sense. Give us a call.